What is up, guys? Thanks for tuning in to our vlog. We're featuring everything mortgage, real estate, personal finance related. This week, really excited to have Justin on board. This is Justin. He's a financial advisor over at Investors Group here in town. The purpose of him coming on here today, we're just gonna bounce some ideas back and forth off each other. He's got some questions for me regarding the pre-approval process that he's gonna fire off. Many questions that you guys at home would have. Before I let Justin take over from here, don't forget to hit that like and subscribe button so we can keep bringing you great videos in the future.
Hey everyone, my name is Justin and I'm with IG Wealth Management just here in Waterdown. And what I do is I work with people to reduce your financial concerns through getting to know you, planning for the future, and guiding you through critical life decisions revolving finances, as well as figuring out tax efficient strategies to implement in your situations. And it's a pleasure to be here today with Jake. I'm really excited for today's videos. I feel like it's going to be really valuable information. So why don't we jump on in?
Before you start asking questions, I just want to jump in here, and a lot of you don't know this. You might be new viewers to our channel, but Justin and I met, 4 or 5 years ago?
4 years ago.
4 years ago, Justin came to work for me at my landscape company. He was a young, bright-eyed student at that time. So I watched him kind of grow in that sense and go through his whole program. So it's great to reconnect with Justin on a different level, and it's just fun having having relationships that last a long time. So Justin, thanks for coming on, and happy to answer the questions you have.
Awesome, let's get started.
Great.
So if I was a potential client of yours, what would be the first thing I should think about when it comes to buying a home?
Well, there's a few things. If you call me looking for, well, first of all, you're probably going to call a real estate agent. That seems to be 9 times out of 10 the first people a client would call. Then that real estate agent will kind of refer you over to get the pre-approval done. We'll touch on that a bit later.
Okay.
But the main thing with, you want to be pre-approved before looking at any houses. The main reason in today's market is the housing, what am I trying to say? The housing inventory right now is extremely low, which makes that a seller's market. A seller's market means low inventory, high prices. So these houses are moving super fast. Houses will go on the market one day, they'll be gone 24 hours later. So you want to have your finances in a row before you start looking for houses,
right?
So that when you find the one you want, you're going to be confident in pulling that trigger and making an offer. Okay.
Now, you mentioned that we would want to have our finances in order. How would, if I were, again, a potential client, how would I go about getting my finances in order, beginning my house hunt?
So the first thing you're going to want to do is you're going to want to reach out to whether it be a mortgage agent like myself, a member of my team, a mortgage broker, mortgage specialist at your home bank, or a lender directly. So there's a few different people you can call. Basically, you're going to want to jumpstart that pre-approval process like I talked about earlier. So getting pre-approved means you're getting a commitment from a lender to advance you funds, a certain amount of money at a certain interest rate. You're getting a commitment from that lender. This is where you find out how much house you can afford and what those monthly payments are going to be. So when I say getting your finances in a row, kind of ducks in a row, you just want to know what you're jumping into. You want to know how much you can afford. You want to know what that payment's going to be. You're going to want to know what that monthly burden's going to be. So just making sure you have all the information up front before you start that house hunting process.
Okay. Now, you mentioned how quickly houses fly off the market. Other than the inventory levels, why else would someone be looking to get pre-approved?
There's a couple good reasons why someone would want to get pre-approved. Not just like you said, because of the housing inventory levels. First of all, you're going to save yourself a lot of time and headache in your physical search for houses. Okay, so if if you don't get pre-approved and you're looking anywhere from, $300 to $1 million, that's a lot of houses.
Oh, yeah.
But if I tell you, Justin, you can afford no more than 650,000, that's going to cut your search in half, essentially.
Oh, yeah.
Okay, so that's going to save you a ton of time in just physically driving around. So it's going to, take a little bit of stress off your back. Secondly, in personally dealing with real estate agents, I know their perspective on how they want clients to come to them. So like I said before, your first call 9 times out of 10 is going to be to a real estate agent.
Right.
Now the real estate agent's going to want you to have your pre-approval done before calling them. So their first recommendation is going to be to get the pre-approval. So I find if you approach a real estate agent with your pre-approval, I find you're just going to get a bit better service. They're going to take you a little more seriously on that initial phone call. You're not going to get pushed to the back burner. Not to say that that's how all real estate agents behave or if it's right or not, like everyone should be treated equally, but if you're prepared, then the real estate agent's prepared to deal with you right away. Okay, so it's just going to cut your search time in half. You're going to get a bit better service. It shows a sense of seriousness to the real estate agent.
Right.
So lastly, like I mentioned before, houses are going so fast, you're going to want to make a quick decision when you find something that you like. So being confident and knowing exactly what you can afford is probably the most beneficial reason to having that pre-approval done prior.
Right. And we've talked a lot about getting a pre-approval done,
Yep.
right? So when I'm looking to get a pre-approval, what would you, I guess not yourself as a lender, but what would a lender look to as in factors for a pre-approval amount?
Right, good question. Yeah. So when you come to me and I fire you off your application, you're going to fill out all your personal information.
Right.
I'm going to take into account, let's backtrack a little bit. The pre-approval comes from me, myself. I don't submit a deal to a lender until we go from pre-approval to the approval stage. So you're trusting me to give you the best judgment on how much you can afford before I submit it to the lender so that you have the best chances of getting approved. Okay, so the first thing I will say is you're going to want to be as accurate as possible on your application because I need to know all the information. A lot of clients don't prefer that you pull their credit report on a pre-approval because they might not be there yet mentally to buy a house. They're just kind of shopping around. But 9 times out of 10, we're going to be pulling that credit report. And we're going to be looking at all your assets, your liabilities. The main one's going to be, obviously, the lenders are going to look at your credit score when I submit this deal for an approval. That credit score is going to determine you whether you're eligible for A lending, B lending, C lending, private money. There's a bunch of tiers going down, but you want to be in that A level, obviously, because that's going to give you the best rate. Okay. So the farther you drop, the higher your interest rate's going to be. Okay. So that's the main one. Again, back to the down payment thing. We do look at kind of what you have as a down payment. The minimum down payment in Canada here is between 5 and 15%. So a high ratio mortgage would be down near the 5. We can talk about high ratio mortgages in another video because that's a whole different topic. But 5%, if you look at it this way, 5% of 300,000 is $15,000. Okay, so that's going to be kind of the minimum. You're not going to find much under 300,000 nowadays. So that's kind of a good benchmark to start at is the 5% $15,000 mark, and then it just goes up from there, right?
Yeah. Definitely.
Depending on your situation, you might require more of a down payment. First-time home buyers, 5%. If you start getting into the different loan-to-value ratios, everything kind of changes. But it's a whole other topic. We could talk for days on that. The third thing that we look at is what's called your debt servicing ratios.
Yep.
So one would be, we call it the GDS, which is your gross debt service ratio, and your TDS, which is your total debt service ratio. They're essentially, I don't want to say they're the same. Their bases are the same in the fact where we look at the principal and interest payment, your heating costs for a month, stuff like that. But the only thing is your total debt service ratio will take into account is your your assets and liabilities and kind of what your monthly payments are, whereas the gross debt doesn't really look into your liabilities all that much. So now each lender will slightly vary their GDS and TDS ratios. GDS, I think right now normal is about 39 and TDS is about 44%. Again, we can dive into that further in another day and what exactly falls into those ratios.
Okay.
But there are guidelines that lenders follow that you have to come in under a certain percentage. So lenders use these percentages to make sure that your monthly mortgage payment doesn't put you over their guideline percentage of how much income you make in a month. So they kind of take it into monthly basis. If you make $5,000 a month and your mortgage payment is $5,000 a month, then you're 50% GDS or TDS, so you wouldn't qualify for that amount of mortgage, if that makes sense.
Yeah. So if for example, the one that's a 39% cutoff.
Yeah.
If I go in or I come to you
Mm-hmm.
and we figured out that I'm at 40%,
Mm-hmm.
is that like a hard cutoff 39, or is there leeway in that?
It is a hard cutoff on the lender side. The good thing about working with the broker is there might be a different program we can look at that might be slightly different ratios. We can look at your monthly debts and find different ways for you to cut those payments down, whether we're paying off debt maybe with the mortgage or, kind of moving some money around. There's ways around it to get you within the realm of those percentages, but they are pretty hard cutoffs from the lenders if you're over and above that.
Okay.
But the best thing to do would just be to, like I said, you have to be as honest as you can because the lenders are going to find this information out anyway. So the quicker I know your situation, then the quicker we can make a plan to get yourself within those guidelines. Again, whether we lower the mortgage amount or something like that. There's always a way to get your GDS and TDS ratios down. It's just figuring out the best possible option for you.
So what I'm hearing is provide the most accurate information to you, so we make sure that we get an accurate pre-approval amount.
It's so important because like I said, a lot of people coming for pre-approvals, they don't love when you pull their credit report, which tells us everything we need to know.
Mm-hmm.
Okay, so being as accurate as you can, like you said, it's going to give you just the most accurate outcome and relieve the most headaches for both sides, right?
Right. And if we're above the TDS ratio or GDS ratio, it's not the end of the world. We can still work around that.
Absolutely.
Okay.
There's always other options. That's the nice thing with working with a broker. There's always options to get you funded.
Awesome.
So the last thing, that we're going to look at, we kind of went off on a tangent there, I'm sorry, but the last thing we're just going to look at, we're just going to verify your documentation, ID checks, your proof of income, your employment history, other information about your debts, etc. So there's a lot of things that we verify before giving you that pre-approval.
Okay. So talking about down payments, and given where the housing market is today, do you have any ideas or strategies how someone can start saving for a down payment, specifically first-time home buyers?
Yeah, so there's many different ways that one can come up with the down payment. Depending on the lender's programs, there's different guidelines, of course, but the most generalized ways to save for a down payment would obviously be your personal savings account,
right?
Whatever you and your co-applicant have saved, put aside. In a lot of cases, your down payment can be gifted from a family member or a friend or anywhere really. There are, touching on the first-time home buyer, there are loans available to first-time home buyers. We can touch on that in a different video. In your industry, you're well aware of the TFSA and RRSP. Those are great savings options to set up automatic payments on those just to make sure we're chipping away. Again, back to the first-time home buyer thing, you can take advantage of those kind of accounts, the TFSA and the RRSP. Specifically the RRSP for first-time home buyers, in the sense of the first-time home buyers. What is it called? The home buyer plan, I guess you want to call it.
Yep.
And basically what this allows you to do as first-time home buyers is you and your co-applicant can borrow up to $70,000 tax-free from your RSP. I think you did a video on that a little further in depth.
Yeah.
So
right.
If you want to hear more about that home buyers plan, hop over to Justin's page, and he's got a little bit more in-depth video on that specific program. It's really good information, so make sure you guys go check that out.
Yeah, we'll see you there.
So before we take up too much of your time, I just want to thank Justin for coming on here. It's been great to have you. I hope I answered all your questions. If you have any more, please reach out to me directly or to Justin over on his page, and get in touch with him, and he can, fire those questions over. So a brief recap of what we talked about. The down payment, especially in today's current housing market with inventory levels being so low, you want to make sure you have that pre-approval set up before you start looking for a house, guys. I can't stress that enough. Real estate agents are going to love you. You're going to feel confident pulling the trigger when you find that house that you do love. Again, make sure in your pre-approval process that you are as accurate and as honest on that application that you can be. If you don't want us to pull your credit bureau, I do recommend pulling the credit bureau, and we can talk about how that affects your credit score later. But again, I encourage you to hop over to Justin's page. He's got some really great videos on there about personal finances, about your TFSA accounts, your RSP. He dives a little bit more into that home buyers plan that I mentioned before. So hop over there, check it out. If you're still with us, hit the like button, hit the subscribe button. We love bringing you these videos, and you only help us by showing us love. So thanks again for viewing. Check in next week. We are doing another interview with someone special that you're not going to want to miss. So thank you guys again, and we will see you in the next video.